over. So, hey, how's Thursday treating you guys?
Hey, Scott. Yeah, not bad, not bad. Hi, Jamie. How are you?
I'm good, Andy. How are you?
Good. Yeah, yeah, doing great. Doing great. And looks like we're going to have a great crowd. They're still filing in here. Welcome, everybody. Thank you. And welcome to Robert. Looks like he's brand new to the platform. So welcome aboard, Robert. And yeah, I hope you can find this webinar will work for you today, and you can learn something from it. Me and Jamie both, we all try to put in some good content that will no longer not only show you the software, but to also maybe give you an idea of how maybe you can tweak your trading, or you can learn something to profit you in the marketplace, and that's our goal here. So thanks, everybody. My name is Andy. That is Jamie. This is the Trading Studio. Let's dive in. All right, before we do, let's go over the disclaimer here real quick. Okay, we are content publishers. Okay, this is for educational purposes only. We hope to share some wisdom with you. We're both long-term traders, but nothing that you see or hear today should be construed as investment advice. Okay, that's not what we're trying to do. If you are a registered advisor. But let's move on and let's go over the agenda for today. I'll recap a really sweet trade in there that I know Jamie will dissect for us. He'll take over the screen sharing at that time. And then letting winners run. I'm going to show you two Holly examples today of how you can use candlestick patterns in keeping yourself in a winning trade longer. Okay, I think is with my years in experience, the two biggest problems with unsuccessful traders are, and everyone has heard this, they hold on to the losers too long and they cut their winners too quick. I think the biggest problem is letting your winners run. I see more that being an issue more than letting losers run against you. But anyway, I'll have some thoughts to share on that. And then I always like doing this when somebody comes in to our online chat or send us an email and looking to helping them build an alert. And a lot of times you got to improvise. And I'm going to show you a case today where a guy was wanting a gap to close alert. It's not something that I use, but I kind of grasped the idea and I kind of improvised and created this alert. And I'll share that alert with everybody too for those who are interested. It is a kind of a different concept, but yeah, I can see the strategy behind it. So we'll discuss that as much as I know about it. I don't know a whole lot about it, but enough to get in trouble anyway. So and then we'll have some Q&A, and if we have time today, guys, we've been really busy lately with a lot of the questions. If we do have time at the end, we'll share ideas as far as setting price alerts, and this is where we'll get audience participation. And I'll ask you to give me a stock, and we'll set an alert price, and then I'll share all these alerts with everybody in here, so we can kind of track them and look at them the next week. That'll be fun. But before we dive in, I do want to cover some of the support, education, and training that we have here. Robert, you may be interested in this. It's you're brand new. We have tons of resources where you can get training, education, and support. All right. You can see on the left side of my screen there, we have webinars every Monday through Thursday in the same time slot, 5 Eastern. And some of you may have been to the one last night where Dan Merkin and Brad Williams hosted that. That's our CEO and our CFO. And then Monday, Tuesday, and Thursday, it's myself, Jamie, or Steve kind of pairing up in twos and bringing you content and education. And we also want interaction. We want you to ask questions. We will get to it as soon as we can. Now, we have seen a huge increase in these webinars, so bear with us. If we miss you, just hit us again later in the chat and say, hey, you missed my question, and let us know. We'll try our best. Jamie will be on top of it right now as they come flying through. And Jamie, just let me know if it's something that you can't handle, and I'll stop and I'll demonstrate it for them. At the bottom there, guys, it says the support webinar. That is every Monday through Friday at 12 Eastern time, when this is starting to really attendance is starting to grow in there as well, which we love seeing, because that's the best place to come if you're having issues with maybe building a configuration, or you don't know how the software works in some capacity. Come in there, you can ask your question. It's a live stream. We'll have a chat in there. You ask your question, and we can demonstrate it for you. All right, let's move on here. And I'm going to leave that for Scott toward the end. Visiting here and you're kicking the tires around, Scott will also have a discount code that you can use at the end of this webinar. But let me back out for now, and let's talk a little bit about the market recap. As we're, 12 years now, Jamie, we just keep moving higher, all-time highs, it looks like, once again on the close. I think we finished up on the day, but not much. A little doji action. We'll see what happens tomorrow. Is it going to be what we call and let me find while I'm talking to 20. Got that 20 on kind of a longer term swing. I'd want it to keep bouncing there. A close, but a little bit nervous, and probably start thinning out of some of my longs, depending on your time horizon. If you're an investor, you might want to give it to the 200 down here. But I'm a short-term swing trader. I look.
Guarantee to that.
Feels good. So
yeah, that is one thing that's been hot topic of conversation. We tripled the money supply, and I forget the actual percentage, but I'm spitballing here. I could be slightly off, but it's like 75% of all currency ever printed since the U.S. dollar has been in
moderate and hit on Stu, but yeah, nice day. Let's
I
hit
think,
them. Yeah, good.
Okay.
Let's see.
So we'll leave that one soon.
Sure.
As far as moving averages disappearing off of the web version, that seems kind of weird.
Jamie, is this new to me or something? I did not know.
That's is what I'm getting from this question.
Sure.
So asking is Holly, you should have eyes. Okay, perfect. All right, ladies and gents, so making up the sum of the AI, and then we can see right here I had 2 and we had 6 from 1.0, and that's what we're going to take a peek at here. And typically what I like to frog about moderate risk, there is no profit. So people like myself, Andy, Steve, if we're in front of the machine, we're not really using a stop. Let's take a peek at the frog trade. Get my pointer back here. All right, so frog, here we're looking at frog on the form of an opening range break. Did this position move, followed by some sideways consolidation, and yet one more opportunity. Here we see the action paid. The price action looks like there was a ton about 10:30 my time, which would be 11:30 Eastern time. Nice little opportunity to add to that position right here. You would have had to be patient because it took it so here. All right, so once again, ATHA, statistical probability, gets us the first signal from the AI. We get an opening range breakdown here, opportunity to add to the position, and then another little grind down, nice and tame. So between frog and ATHA, nice add-on opportunities and nice risk between conservative and moderate spread there. Now you can notice here, actually BWin looks pretty good. Let's look at that one too. Notice the reason that the AI closed the trade out. Once again, profit save. I don't know why my charts are lagging so much, but there we go. Thank you. All right, so BWin, another long from the AI. Boy, look how close this came to a stop out. And let's go ahead and look at the smaller time frame. Okay, so that was the candle right off of there. All right, candle before gets us right down to that stop area. That's actually not a bad sign. I like that wick action being put in. Then we get the buy signal right here. Hey, not too bad, because we've already seen it try to visit that stop area. Wicks back up, we get an entry signal here. Of course, sometimes they do this, they pull back a little bit, so we're underwater for a little while before getting some profit opportunity up in here. Now the AI got a little nervous here because profit save and reduced risk are basically modified forms of a trailing stop. So we got a little action here. AI decides, you know what, trade's not working, I'm going to take my small loss. And by the way, the numbers that you guys are seeing here, I should have said this earlier, all of these numbers are based on risking $100 per trade, and then the AI sizes us accordingly. All right, different shares for different stop levels. So basically a flat, taking a $14 loser here. With this one, not near as pretty. A lot of back and forth action here. Looking at 10 period, not as much in control as the prior two and the frog and the ATHA, but in this case, all we had to really do is just stick to our stop level, decide if we want to get out with the AI right here. How it acted around the stop area gives us a little confidence to stay in there, and basically just had to be patient with this one. Not really jumping to add to, jumping on the bandwagon to add to this one because it's not near as pristine as the other two that we looked at. But a winning trade nonetheless. All you had to do is be patient, stick to your hard stop loss. You had plenty of time to exit for a nice winner before the close kicked in. 109 bucks at the close, a little bit higher up here. So all in all, not a bad trade from BWin as well. Typically, I like to try to focus on a trade around, which is one of the stops that got hit, and then we see how that stock acted around the stop area. Now, this one kind of looked good at first, all right? Buy here, got stopped out pretty quickly here. I think that trade lasted all of 12 minutes, 8:46 on the entry time, 8:59 on the exit time, Central Standard. So popped out pretty quick. It did act pretty decent around the stop level here. So, once we got the wick, we got the stop out, we could have easily set that as our new stop level if we wanted to re-engage this thing. Throws up a little wick here, almost comes back down and tests it again, but not the most beautiful trade around. If you could have gotten long somewhere around 25.64, actually that's a pretty significant move. It doesn't look big, but it's almost a point there, but that would have been the maximum threshold. And then, it looks really good here, but as soon as we get the close below that 10 period, the wheels fall off again, all right? So not really the greatest example of a trade around. Typically we like to see them, do this and then not go back there and revisit that. So that's pretty much all I got from Holly today. Once again, notice the wick that we had on the upside here, right off the open for another 30 minutes, cycles down. We get the buy signal coming back up from the AI, and then we've got that auxiliary pattern playing out. Now, Holy Grail, not a Neo trade, but an excellent add opportunity right up here, 9:15 Central Standard Time. After the AI signals it, we got the potential opening in slightly over 10 on the relative side. So a great add opportunity here, and then it was just about picking your exit. Probably nobody's going to top ticket up there. Maybe you got out of a little bit, but even holding it into the close, you had a very handsome gain. I think we were up 8%. During that wick, but PCAR coming to life, auxiliary pattern playing out, huge volume. So this is what I like to call a 3 golden star trade. Statistical probability, auxiliary pattern, along with a raging river of volume as well. So hats off to Holly on PCAR. Not a bad day today, Andy.
No, not a bad day at all, Jamie. Not a bad day at all. All right, you can pass it over. We do have some questions coming in. Somebody asking about back testing, and there is an area where you can. It's not. There's like 2 areas where you can use one for commissions and the other one for slippage. So maybe you can point him to that. Tim Walter. That's what he's talking about. He said he'd like to see more, but there is an area. I think it's called commissions per trade, and then something else. It used to be slippage, but now it's something else. I can't recall.
Yeah, and you can put Interactive Brokers. You can put $1 per trade in that one field, and then you can tack on an additional per share value in there.
Yeah, for slippage. Yeah. So, but anyway, if that doesn't answer your question, send us an email. We can point it out to you. I'd have to run a back tester, pull up one, run a back tester, and show you. So I just don't have a lot of time for that today. But send an email in, and we'll definitely get back to you and show you what you can do. All right, let's dive in. I think the next thing I was going to talk about, without pulling up my little cheat sheet, was going to be holding on to your winners longer. And I know we have, you know, new people. I talk about this regularly, but I found really two great examples today in Holly. And I want to show you something, because in our back office, we see all these numbers, okay? How Holly performs in conservative and how Holly performs in moderate, okay? And I can tell you right now, moderate profit way outpaces conservative profit. And sometimes I like to compare this, because I was a day trader for 17 years. I like to compare it by saying conservative profit would be your average to below average trader. Moderate profit would be your really good traders. And what I mean by that is really good traders are, man, they know how to let their winners run, okay? Let's take this PCAR, you know, for an example. I just know from experience, a lot of traders, if they would have taken this trade, they get up here and it gets up around $95 and they're going like, wow, I'm up $3 in this trade. I'm going to take it. Bang, they're out, you know, just for the simple reason is because they're looking down at the blotter and they see a lot of green and they just want that money. So they take it. Okay. And if you're going to be a day trader and you want to do really well, this goes for swing trading and investing and everything, you know, you have to learn to let these good trades work for you. And a good method you can use, and I talked about this before, is what's called a bar reversal. Okay, and what I mean by that, I like using a 15. Okay, if you use a 5, there's a good chance you're going to get, you know, jigged out too early. But this is a great example of a bar reversal. I got 2 of them for today, and I think, gosh, if I remember the other one, I'll find it. But take a look how this just kept going. Each 15-minute bar just kept creeping higher, nowhere near reversal. This just kept powering higher, higher, higher. Now we get up here and we put up what we call a top and wick. Okay, that's a warning sign. That means tried to really extend, sellers came in and pushed it down. Okay, every one of these candlestick charts can be a human emotion. Okay, that's what it is. It's tracking human emotion. Okay. Tried to run, sellers go, oh no, this is just too much. I got to take this profit. I'm up 10 points in this thing, you know? And so there you have it. Well, even if you didn't get out the top with, you know, all these traders that got nervous and started taking their money, you had a bar reversal right here. And look what happened, you know, after the bar reversal, okay? And this is so typical. You had a nice run here, and then for 45 minutes straight, this thing did nothing but sell off, okay? To the tune of about, let's see, the bar reversal was around 99.70, and you know, this thing got as low as 98, so buck and a half, you know, before it finally got sideways and really just kind of slopped around the rest of the day. So this is a method, even if you're trying to like hang on for the, you know, for the even a more, you can at least sell half in a situation like this and then see if it regains this moving average and pushes higher. But this is why I really like 15-minute charts versus 5-minute charts, okay, because it slows things down for you, okay? A 5-minute chart, I'm just going to take a look at it. Looking at this right here, it probably did very well too, but we'll pull one up anyway, just to take a look. And yeah, let's see, right there, you had a very small bar reversal right there, which would have got you out if you were on a 5-minute chart. That's why I really love slowing things down and looking at a 15-minute chart, okay? Getting less emotional, and some people like to use 1-minute and 2-minute charts, and I'm just telling you through experience that is a high-frequency trading playground. They are going to get you if you're playing the 1-minute chart and trying to use tight stops. So be careful with that. We do have another, let me clear this off and get back on my pointer here and zoom in. And let's see, it was a short, it may have been Alcoa. Yeah, here's another good example right here, you know, in a 15-minute chart. Alcoa, if did not have a bar reversal for 1, 2, 3, 4, 5, 6, then we had a little doji, you know, not as predominant as a wicking tail, but still, it continued, it stopped going down on this bar right here. And then what you had after that was a green bar reversal, and then thing had a pretty good pop. You know, you would have actually you know, gone back to a flat and even down a little bit had you stayed in that. So just a really good method to help you stay in the charts. trader. Okay, learn to hold on to those winning trades, because I can tell you right now, our back office, it doesn't lie when it comes to studying these moderate profits versus the conservative profit. Moderate profit outperforms, and we see this all the time. Now, had you been playing the conservative profit today, you probably would have lost money. I can click over here and see. Well, it says up 721, but I'm just looking at that, Jamie. I'm not really seeing it. But,
Yeah, I got mine on $100 risk per trade.
yeah.
And I'm showing on conservative mode that would have yielded 361 gross.
Right. Okay. So we're all, I forgot, we have these, it's going to be different when you have it allocated like I have it allocated. So that's what's making it different. But you can still see it was almost 2 times as great in the moderate profit. Yeah. So guys, try to learn to do that. I'm telling you, the best day traders I know, they're not looking to stay in a stock for 15 to 30 minutes. They're looking to stay in a stock for 3 to 5 hours. Okay. So, and they will add to winning positions, getting back to that PACR. If they see the momentum there, the volume there, they'll add as it's going up. I know it's hard to do because your average price goes up, but still, it's a psychological thing. And once you get to, to where you're able to, letting these winners run, slowing things down. That's why I try to get a lot of people into swing scalping, because I know how hard day trading is and how emotionally straining it can be. So on the mind. So anyway.
Hey, so Andy, while we're on the topic of managing a profitable trade there,
Sure.
Jim was asking any thoughts on how you can sell into strength versus weakness on the bar reversal. I guess going back to that PCAR trade,
yeah.
Because when you look at PCAR on that 15-minute time frame, all the bars are pretty similar in size. But imagine before that wick became a wick up top, that was a huge green bar compared to all of the other green bars.
Right.
So it just went up a lot more in a 15-minute period than it did before. And of course, I don't know what we're going to see when you squish up your daily over there, if that wick magically coincides with,
No, I don't think it does. And the reason I know that,
it's
Jamie,
at all-time highs.
Yeah, I can see my position in lifetime range is all the way over here. Now,
Yeah.
I will point out something interesting, and this is what you might want to look for, Jim, if you're selling into strength. Many times when you see that topping wick, it is associated with a very high volume bar, okay? Whether it's shorts, just panic finally, just getting out of this thing, or just euphoric buying coming in, a lot of times, and I'm telling you more times than not, it will be accompanied with a very high volume bar like this. So you may look for that, when you're trading it, look for the after it's been up, 10, 12%, and then all of a sudden you still see like this huge volume. Maybe take a little bit off and then use a bar reversal for your remaining position. All right. I hope that's some good information for you guys. I want to go to, and let me see what I did with that alert. Did I minimize it? No, let me just go pull it up again where it is. All right. So a guy sends me an email yesterday, and he's saying, listen, there's a strategy called gap to close that I'm really digging, but I cannot, I can't create it. He may be in here today, I'm not sure. And what he was basing it on was the first 5-minute bar. Okay. So what he wanted to see were stocks gapping up, 3 to 5%, whatever it is, and then filling a good portion of that gap, kind of like our gap retracement thing that does a horseshoe. But what he wants to do is it to drive down. Let me get an example. Let me pull it on. Yesterday here. Let's see. And on this new version, Jamie, oh, good, it's not taking that long. Now, okay, let's take a look at this FTU from yesterday. And let me put it on a 5-minute chart. And let's go back to yesterday. And this is probably, was that it? No, that was today. Okay, so here you have it. Okay, so the stock gapped up, let's just say gapped up around 93, and it sold off all the way down to around 89. So sold off about $4. Okay, so what he wanted to do, I think he wanted to see more of an extreme sell-off, and that could be configured to only catch that, but you're not going to catch very many if you do that. But I understand the concept behind this strategy. So what it is, they're trying to, gap up, trying to shake out the weak hands on the initial 5-minute bar. And then what he wants to see is once it retraces back to the 50% level, and let me just kind of hypothetically draw a wrong chart, Andy. So what he wants to see is once it's retraced back to the position in range where it's exactly at 50% of that 5-minute bar, he wants to be notified. Okay. So I'm going, wow, that's going to be a tough one. And the reason it is because we can't refer to past data in single bars. Okay. There's data points that we use like highs and lows. We have some data points like a 5-minute high, a 15-minute high, a 30-minute high. So we do have data points, but you can't just go back and reference any bar that you want to. It's very hard to do. We are working with a new technology that hopefully will allow us to do this in the future. And don't start emailing me because we have so much on the table. So there's no ETA on this, but hopefully something's coming down the road in a few months. So anyway, I've started thinking, and I love doing these with people because you can get an idea of how you can improvise and make these alerts. Okay, so real quickly, let me just go into the configuration here, and without rebuilding, I don't have time to build it together. I prefer to do that, but I just don't have time today. But let's go into configuration, and I can tell you how I kind of walk through it. Okay, hide unused. Okay, the first thing I said, well, there has to be a gap. So you're just kind of going through this in your head. Okay, so I put a gap of 3%. The stock has to gap up a minimum of 3% because I put a 3 here. Okay, so now I needed to show the stock selling off. How am I going to do that? Well, if I know it's gapping up at least 3%, what I said, well, let me use the change from open. Okay, but I'm also saying to myself, I don't want to put too big of a number in here because the alert I'm using and the position and range I'm using, the stock will have to bounce back to this area. So I got to be careful not using too much of a sell-off. So what I used was a negative 2%, which means from the open, the stock is down at least 2% from the open. So here's the kicker right here. So I just used the position and range. Now remember, the position and range is going to use the range for the entire day. Okay. So this is going to be more effective in the first hour of the day because what you're hoping for is this first bar will establish a range and then the price will come back into this range. Okay. And once again, getting back to the psychology of candles. Okay. The stock gapped up. They tried to shake it out. Buyers came in after a gap up. And then once it retraces to that 50% mark, you're going to get notified by a 5-minute high. Okay, remember it has to be in the range for the day. So it is going to calculate this range right here. I hope this is making sense. This is the best I could do, but you know what? It turned out pretty sweet. So, and then I got a 5-minute range. I want the 5-minute range to be at least 2%. This is why it's probably going to be more effective in the early morning. And then the rest of them are just priced over $3. Change from close has to be above 0. This is preventing the stock from going down too low and going way past the close opening price and then retracing back. You don't want that. But so anyway, I hope this is making sense, and also got a relative volume. I'm looking for stocks that are doing at least relative volume at 2. But let's take a look at this. Is a great example of one from yesterday. By using this same configuration, these are the stocks that came through yesterday, and look at this FTO. Now, it didn't really pan out obviously yesterday, but look what it did today. Now, I'm not saying buy it and hold this. This is not the strategy he wanted. I think he was a day trader, but this is the kind of stuff you'd want to see. And had you bought it, it did go to highs, so you still could have you know, got $2 or $3 out of the trade. But, you know, really, when you see a gap up in a horseshoe like that, you really would like to see them keep going. This one didn't. So once it failed, you know, if you didn't get out, you would have to obviously get out somewhere, you know, around your, that's a fail to me once it doesn't go through. But still, I like the setup, and I would take this every time, because majority of these horseshoe patterns are going to continue in the same direction. Now, the other one was OBLN. And let's zoom back on that one and take a look at it. And this one ended up doing a lot better, I think. Gosh, let me stretch this out. 5-minute charts make me crazy. Okay, so there's your signal. There's your gap up. Okay, it fulfilled all of our filters. It came down, and then you got the signal once it triggered the 50% mark on a 5-minute high right here. Now this one was one, it took a while, but it did go back sideways, and then look right there, once it caught that 20 period moving, I'm sorry, the 10 period moving average, boy, had an incredible move, you know, all day, all the way up to almost $10. So this was a beauty. Okay, had you been using this strategy, you would have seen this OBLN. And I think we had one today. You're not going to get a whole lot in there. It's kind of what I kind of like about this this alert. But let's go to today and see. I think only one came through. No, it looks like we got two that come through. And this was today. Okay. Let me try to expand it even more here. Okay. So not a whole lot happened here. You know, not a big volume trading stock. You can see the average volume is only about 400,000, and it basically, you got your trigger there, and it just went sideways all day. See what this thing did. And this thing really, you know, this was later in the day, which I probably wouldn't be playing something like that. But anyway, during earnings season, you know, which we are gonna be getting into the heart of it here soon. So you might want to keep this around. This might work, and I will share it with you. Let me just go grab it out of here.
Real quick here. If you go back into configure in a second, your change from the close value, I think Jim had a question about that.
Change from the close, 0.
Okay, so it just basically can't be down.
Right, because what you want, you don't want it gapping up 3% and then driving all the way past, say, let's say it drives 2% past the prior day's close and then comes back up. You know, that's probably not what you want to see. If you're looking to play something to the strong side, you want it to drive down and then stabilize and then retrace back up. Okay, so and trust me, guys, I put this together pretty quick. This is something that you can take and then play around with it. Play around with these numbers. And with earnings season, maybe you want to take this up to 3 or 4%, and not get as many come through. You can play around with the gap. You know, you can make the gap 5% if you want to. So take this and play around with it. You know, I don't know about back testing a strategy like this. You know, these are ones that they're going to work quick, or you're going to probably get out. So back tester, I don't think is going to work. All right, but anyway, that was definitely a good one in there yesterday, and then one that just kind of went sideways. And today, this was too choppy. I wouldn't trade that. I'm looking for only 132,000. Well, how'd that come through? Don't I have 300,000 in here? Yeah, for a 10-day average.
And Andy, another good point is these, you know, these stocks to the upside that are big winners, like the what was that, OBLN?
Mm-hmm.
You know, usually they're going to have good action the following day as well. Now, whether that's continuation or reversals, like that OBLN was a pretty good play today, but to the downside, you know.
Yeah. I mean, this is what you're looking for. And when you're trading a style like this, you're not looking for a bunch of winners to come through. You're looking for something like that OBLN yesterday, where you could have just really, you know, crushed it. And, you know, this one, you know, I could see why I would take a chance on something like that, going back to yesterday, but it's not, you know, it's something that if I'm in and it does take out that high and does that horseshoe pattern and then just comes right back, I'm probably not interested anymore. Those you'll get a feel for patterns that should work, You know, the volume was there, everything was, the whole setup and everything was there, and it just failed. So that's going to happen. But hey, look at it. Let's say you cut this one for a flat and let this one run. You did very well yesterday. Yeah, if you held on to it though, it wasn't too pretty today. All right, let me share it with you guys. And if nothing else, even if you don't want to use something like this, which is fine, I understand. But take a look at it and see how you can use these position and ranges and these gaps and change from close. You can get real creative with our filters. All right, I'm gonna drop it into the chat window, guys. So just expand your chat window and I just closed mine. Hold on. There we go. And gap to close. All right, it's in your chat window for anybody who wants it. And once again, guys, I do plan on bringing up that little price alert contest. We just get to, let me see here. We do got about 5 minutes. All right, let's go ahead and do it. Let's go ahead and do it, guys. We'll take, do this for me. Guys, if you have something you're looking at, give me a price alert, where to set it, okay? And be sure to give me the symbol and the price. I will assume everything's long unless you tell me it's a short, and then we'll put a short in there. So let's fire away. And I haven't done this a while, so you guys may not be ready. And if we don't get any, that's fine, because I really didn't tell people that we're gonna resume this game. We had a lot of people playing a while back. But real simple, just if you do, you know what, Jamie, I think I'm going to push this back. Let's see. Yeah, we got a few coming in. Okay, let's go. Okay, MGY, Bill says MGY at 9.4. Let me get back on my 15-minute chart. At 9.4, we'll do that. And that is Bill's. Guys, that's all you got to do. Just give me a symbol, okay, and a price, and we'll save these, and then I'll share them with everybody. And,
all right, Andy, I think the next one is UVXY at 10:09.
oh, expecting some
sellage.
Some selling to come in. Okay, we'll do that. And who's that?
That would be Candy.
I or Y?
With an I.
Yeah. Okay. Interesting. Uh-oh, it triggered. Let me just move it up a little bit.
Yeah, that one topped out around 10.10 in post market.
Okay. All right. And let's see. We got any more coming?
FUBO at 40.
Okay.
That is going to be Captain Orion.
All right, at 40.
40 even.
Okay, we're going to call him Cap O, Captain O. All right, and
you got
P10?
P10 at 611.
P10 at 611. All right, he's looking for a bounce off that sell today. And that is from?
That's from Aya.
Okay.
Then we have Laser, LAZR at 34.50.
I was looking at that last night. At 34.50. Okay.
Mm-hmm.
Let's see. And that is from?
That's KJ.
Okay. All right. And
then we've got the CYTK, and I think that's 21.
21 at CYTK. And that is from
Jeff S.
All right.
FUV.
Oh, good old FUV.
25 and 50.
25.50. Oh,
Yeah, it's a little bit further down the road.
yeah,
That's going to be
okay.
Martin.
All right. AMD.
Yep, 93.90.
Oh, it looks like it's trading there in after hours. I'm gonna have to take it up a little bit.
Yep.
And that is from
Slava.
all right.
Boy, that's up to 94.07.
Oh boy,
So
it's
you
gonna
might have
go
to
off.
go.
Yeah.
You might have to go like 94.26 or something to be safe.
They must have had earnings or something. All right, EXC at 43.11. Looks like it's printing there right now. I'm gonna go around 16. Alina. All right, it looks like that's it. Let me find these. I gotta go in here and put a created column. And should be able to get there. They are. So I'm going to share these with everybody. Let me go ahead and get that GameStop in there. GameStop at 45.
Mm-hmm.
All right, guys, that is it. And I will save all these and share them. And we will come back and check next week. I'll drop those also in the chat window. So if anybody wants them, PAs. All right, guys, there it is. There's the link. And with that, guys, great webinar for the attendees. You guys had some great questions, some good price alerts. Let me bring in Scott, and he can walk us out. You guys hang on. He will have a discount code for you to use today.
Yeah, thanks, guys. A couple of the items on the way out. Be sure to grab the link for the live trading support every day at noon Eastern, tradeIdeas.com/live. Just bookmark that and tune in, ask questions whenever appropriate. We've also got a earnings season ebook. Helps you out to plan for how to use earnings season to your advantage. So go ahead and grab that book, tradeIdeas.com/earnings. If you don't have it already, get that download. We got a new podcast up, just released I think yesterday or Tuesday. Trade Ideas Podcast is what to search for wherever you listen to your pods. Just add us as a subscription and catch that new one, and go ahead and check out the previous ones we released. There's a code, Holly New Year's, all caps, gets you 15% off your first month or year of Trade Ideas subscriptions or upgrade. So if you decide you want to upgrade from standard to premium or just start a subscription, go ahead and grab that code, save you some cash. You can find our Steve Gomez on Twitter at QuantBot. We've also got at Trade Ideas and at Today Trader and some other handles. Trade Ideas Pro is the Facebook handle to follow. And any questions at all, shoot us an email to info@tradeideas.com. It goes to our help desk, gets you the answers you need. We're going to have this recording up later on tonight or tomorrow, and you get an email reminder tomorrow about how to find it. So thanks, Andy. Thanks, Jamie. Y'all have a good rest of your Thursday.
Thanks, Scott. Candy, don't worry about it. You just get a head start on that price alert. I'll see some of you guys tomorrow in the support session.
Yep. See you tomorrow. Bye-bye.